Good morning. Welcome to Stock Market Today. It's Monday, December 10th, 2018. I hope you all had a great weekend. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. And if you're over on StockTwits, I'm there as well under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics. And you can follow along with this show by signing up for a free email. Head over to chaikinanalytics.com/today. So U.S. equities were down in Friday's trading with the Nasdaq faring the worst of the major markets. The S&P 500 actually moved into negative territory on the year. Treasuries were mostly stronger with some curve steepening. The dollar was down against the euro, but little changed on the yen cross. Gold finished up 70 basis points and oil was higher after an agreement on an output cut. WTI settling up 2.2% on the day. Your outperformers on Friday were utilities, energy, and consumer staples, while your underperformers were tech, consumer discretionary, and industrials. And as we get to the desk this morning, S&P futures are down about 30 basis points after that sharp sell-off last week. Asian equities were lower overnight with Japan underperforming, down more than 2%. European equities are weaker. Treasuries are weaker with some curve flattening. The dollar is weaker versus the euro, but little change on the yen cross. Gold is flat and WTI crude is down 1.8% after gaining more than 3% last week. And as we dive right in, you can see that we are testing support as selling pressure continues. There's that big sell-off on Friday to pull back to test that 2630 level, and we are trading just below there in the futures market this morning. So that is the key support level for now. The interim high nears 2815 is the key level for the bulls. The RSI on the test on Friday, did make another positive divergence. So from an indicator standpoint, that is a positive momentum divergence. But as always, divergences need to be confirmed, and we need to see the market stabilize and move higher and really take out that 2815 level to signal that the bulls have regained control. Another potentially positive development is the fact that Chaikin money flow does remain bullish as the market has sold off here. Now, it obviously has come in a little bit, but it does remain bullish. So the indicators are showing some signs that this level could hold. But as always, as I said, the key is now for confirmation, for the bulls to take the ball and run with it, to pull the market back through that 2815 resistance level that's been holding up so far. Obviously, something we're going to be keeping an eye on as well. The market does remain below the 200-day moving average, which is now starting to move lower once again. Your market in a minute, if you're following along in that email at home. Again, chaikinanalytics.com/today. You can get the bullet points, see kind of what I'm talking about in my note to Chaikin Analytics members today. S&P 500 test support at 2630 and is now negative on the year. We talked about that already. The Nasdaq underperforms as growth and momentum remain under pressure. 10-year yield falls to 2.85% in a flight to safety. Oil holding support so far at around the $50 level after becoming deeply oversold. And treasuries do point to a lower open here thus far this morning. Looking at the major indices from a Chaikin Power Bar perspective, just a reminder, the Power Bars tell us how many stocks in each of these indices are bullish, neutral, or bearish based on the Chaikin Power Gauge rating. And we can see that everything is skewed to the bearish side of the coin. The Dow, 2 bulls to 5 bears. S&P 500 sees a big reversal on Friday. 46 bullish or very bullish stocks, 110 bearish or very bearish stocks. Nasdaq, there's that Nasdaq underperformance. Underperforms the S&P 500 by more than 1% and skewed greater than 3-1 in favor of the bears here, as there are 23 bearish or very bearish stocks for only 7 bullish or very bullish stocks. Nasdaq, slight outperformer on Friday, but that power bar ratio still skewed heavily in favor of the bears. 145 bulls, 487 bears. Bonds rally in price, sending the yield lower. Again, we said the 10-year yield is at 2.85%. We'll take a closer look at that one here today. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are bearish, and the major indexes are all skewed to the bearish side. Now, our stock of the day, every day in that email that I mentioned, we will auto-generate a stock for you to consider. You want to kind of run through the analysis and see if the trade makes sense in the current moment or if it bears being added to a watch list. Today's stock is Arconic, ticker symbol ARNC, closed at $20.29 on Friday, down 1.17%. So a fairly decent outperformer on the day, as it did not go down nearly as much as the S&P 500. And the Chaikin Power Gauge rating for Arconic is very bullish due to very strong earnings performance, very strong price volume activity, as well as attractive financial metrics. And as we dig into the chart here, what do we see? We have a very bullish stock with a strong trend, but it is in a weak industry group. Turning to the bottom of the screen now, we read our charts from the bottom up. The ribbon tells us where the power gauge rating is and has been over the past 12 months. And you can see really since the July timeframe, we've been predominantly bullish. And then somewhere around the end of August, stocks started to outperform the market, and the intensity of the outperformance has been increasing. Notice the stock is really held in as the market has sold off. That's a bullish sign. Right, so a very bullish stock that's outperforming the market tells us this is the type of name that we want to consider as a potential long idea. Potential long idea. What we really want to do then is wait to see if the setup is there. And right now, I would say it isn't. First off, we have that weak industry group. Second off, we're overbought. We're rounding out of an overbought condition, but the stock is overbought. In an environment like this, we always kind of would rather buy a stock when it's oversold rather than when it's overbought. But that's especially true in an environment like this where the market's choppy, it's testing key support levels, it hasn't been able to hold on to rallies. You can be really selective with your entries and exits, and I think you want to be selective here. I think you want to add Arconic to a bullish watch list due to the fact that it is overbought right now. Money flow is bullish. It is above the long-term trend line. Long-term trend line is flat in line with price here. I think this is an interesting name to have on a watch list. I do not think it makes sense to pull the trigger on the long side here today. I think we want to add Arconic to our bullish watch list. Keep an eye for an oversold reading to set up a better entry point. Turning now to our sector tracker, let's look at the major movement over the last 5 days for the sectors in the S&P 500. And one thing should immediately jump to mind, and that is flight to safety. Over the past 5 days, the utilities and the real estate stocks are leading. Those are bond proxies as investors bid up bonds and yields come in. They're also bidding up the safe haven bond proxy parts of the market, utilities and real estate as well. Consumer staples have been outperforming. Now, they are still down, but they've been outperforming. That's a sign of safety in the marketplace. Financials under a lot of pressure as yields come in. Industrials under a lot of pressure as trade tensions continue. Healthcare has been a bright spot, but even that was not immune to the sell-off last week, down 5.5% over the past 5 days. In the middle of the road are your comms, your discretionary, and your tech. We really want to see tech and discretionary get in gear as those tend to be risk-on type sectors of the market. They just are not there yet. Flight to safety has been the key theme in the marketplace for a while. And speaking of the financials, our industry in focus today is regional banking services. And we can see that over the past 6 months, this subsector has underperformed the S&P 500 by nearly 15%. And its power bar ratio, which measures future potential, is very weak, with more bearish than bullish stocks. You could see here 16 bearish or very bearish stocks, 0 bullish or very bullish stocks. Group is currently the worst ranked of the 21 subsectors that we look at, coming in at 21 of 21, and it has moved down 9 slots over the past week. Some of the indicative very bearish names there are First Republic Bank, FRC, Westomer Bank, WABC, and Heritage Financial, HFWA, all with very bearish Chaikin Power Gauge rating. So if you own these stocks, you have to ask yourself, why do I own them? HFWA is a very bearish stock, weak trend, weak industry group. You can see it's below the falling long-term trend line, and it's just beginning to once again underperform the market. Now, money flow has been bullish, We are closer to oversold than we are to overbought, but notice that the indicator did not get to overbought readings. So this is definitely the type of name that we want to think about. If we own it, why do we own this stock? I don't think the setup is there for a bearish trade just yet, but I don't like this name here. I think you want to add it to a bearish watch list here today. HFWA, not a name that we want to consider on the long side. Turning now to our trending names, yesterday's S&P 500 movers, or Friday's rather. PPL, no real news, sends that stock up nearly 3%. Newmont provided an outlook that sends that stock up 2.24%. SLB, Schlumberger rallied with oil. EIX increasing their dividend. That sends that stock up 1.7%. No real news on RE for 1.5% gain there. Ulta down 13% following their 4Q outlook. COO down over 12% following their earnings print. American Airlines caught a downgrade to send the stock down 9%. AMD and HPE, just part of that tech sector that's been under pressure. Those stocks both down over 8% on the day. So here's what we're talking about in our note today. Here's the Nasdaq underperforming, but it is kind of getting close to the support level. These are the Qs, the Invesco QQQ ETF. You can see we're below the 200-day moving average, which is beginning to turn lower. RSI has moved into bearish ranges, is once again heading down. And Chaikin money flow, which was holding in with a bullish reading, has now actually ticked ever so slightly to the negative side. You do have some support here in the 155 to 157 area, so we'll be watching that key level closely. But Nasdaq has really been underperforming to the downside as investors have just been taking a risk-off view. They've been selling the high valuation growth and momentum names during this most recent leg lower, and really since the correction started in the late September, early October time frame. So as it nears support, we want to see how it reacts. We did kind of hold that support level back in mid-November. We'll see if it can hold that level again. Interesting name here, though, to consider on the bearish side is Box. Very bearish stock, weak trend, weak industry group. Below the long-term trend line, triggered a sell signal. Our relative strength sell signal was triggered here this morning. Very bearish stock, underperforming the markets, became overbought now, and money flow has been intensely bearish. Now, we're slightly bullish here, but it's been predominantly bearish since the August-September timeframe. I think Box sets up a compelling entry point for bearish investors, via puts or put spreads. I definitely think this is a name that you do not want to own, just given the pressure that the Nasdaq is under, the pressure that software stocks are under, and the fact that this stock did trigger a sell signal here at Chaikin Analytics today. Here's that 10-year yield heading lower as investors gravitate towards the safety of fixed income. 10-year yield, double top here, unconfirmed by momentum. Notice the RSI made a lower high as yields matched the recent highs, and it's now turned lower, below the 50-day moving average, below the 200-day moving average. Support comes into play around the 2.8% mark for the yields, and we will notice that they are deeply oversold. Yields are deeply oversold, meaning that the bonds themselves are overbought. Given that and the fact that we are close to support, I wouldn't be surprised to see yields stage a little bit of a rally here, but there is heavy resistance just overhead. I just don't see in this environment how yields are going to get a ton of traction to the upside, at least not here in the near term. And here's crude oil holding support around that $50 level. Now, again, we are down 2% here this morning, but we were deeply oversold, tested support at $50. Below the 50-day, below the 200-day. The 50-day is crossed below the 200-day as well. I think there's a lot of resistance overhead in the $60 to $64 range. But what's interesting to me is that energy stocks on a relative basis, this is the XLE relative to the SPY, are actually holding support. So we'll see if the energy stocks can stage a little bit of a rebound here as they've held relative support. Oil rounding out of that oversold condition. So a lot of moving parts here to the market this morning. Obviously, we'll be keeping an eye on them as we always do. Sign up for that email. You can get daily stock ideas for free. chaikinanalytics.com/today. And if you like what you're hearing here, help us spread the word. You can share our link on social media. I will see you back here tomorrow, 9:15.